All right, welcome. Today we've got a real head-scratcher for you, straight from the wild world of biotech. We're going to unravel the story of how a company's stock absolutely soared right after dropping some truly terrible news.
So here's the big question, right? How on earth does a company's stock jump nearly 10% after reporting just awful earnings? I mean, it goes against everything we think we know. Bad news is supposed to sink a stock, but not this time. So what's really going on here? Let's dig in.
Okay, so first up, let's just lay out the paradox. Because honestly, when you see the numbers side by side, it feels like we're talking about two completely different companies.
Just look at this. On one side, you have CRISPR's Q4 results. Revenue, a measly $864,000. They lost $1.37 a share. Basically, they missed expectations, big time. And then you look at the other side. The market's reaction, the stock price shoots up nearly 10%. It makes no sense, right? A total head-scratcher. So, you gotta ask yourself, where did investors find the good news? I mean, if the bad news was staring them right in the face, they had to be looking somewhere else. There must have been some other signal, some hidden piece of information that just completely overshadowed the terrible earnings report. Well, it turns out the answer wasn't in CRISPR's report at all. Nope, it came from somewhere else entirely, from a much bigger, very important partner. That's the key right there. The clue, the thing that sent the stock flying, was buried in the earnings report from its partner, Vertex Pharmaceuticals. And this, my friends, is where the story gets really good.
Okay, so to understand the bombshell that's coming, we need a baseline. The therapy at the center of all this is called Casgevy. For all of 2025, its revenue was projected to be about $116 million. You know, a respectable number for a brand new treatment, but it's not exactly setting the world on fire.
But then, bam, Vertex drops this absolute bombshell. They put out guidance for 2026, saying their products, besides their main cystic fibrosis drugs, a category that's basically all about Casgevy, would bring in more than $500 million. Suddenly, that $116 million from last year, it looks like pocket change. And when you see it visually, it's just staggering. This isn't just a little bump, it's a colossal leap. Investors saw that forecast and they got it instantly. The whole story changed in a heartbeat. It wasn't about CRISPR's tiny revenues now. It was about the gigantic potential for the future, a future that was just validated by their massive partner.
So what exactly is this drug, Casgevy? And why is everyone suddenly convinced its growth is about to explode? Let's zoom in a bit.
Okay, so Casgevy is not just another pill. This is a huge deal. It's the first ever FDA-approved therapy that's based on CRISPR gene editing. We're talking about a genuine scientific miracle here.
But here's the thing about miracles. They can be complicated. Casgevy is a one-time treatment for really awful diseases like sickle cell. But the process to administer it takes months, it's super involved, and yeah, it costs over $2 million per patient. Because of all that, nobody was expecting an overnight success. The consensus was this would be a slow burn. And just to give you an idea of how complex it is, here's the process. First, they have to harvest a patient's own cells. Then those cells get sent off to a lab to be edited using CRISPR technology. And finally, the newly edited, healthy cells are infused back into the patient. It's an incredible logistical dance for every single person. So when Vertex came out with that huge number, it was like a massive signal flare to the market. The message was clear. That slow burn phase, it's over. They're figuring out the logistics. The therapy is going from this amazing scientific idea to a real, scalable product that's going to make a ton of money. You can feel the momentum building.
And here's where it gets even bigger. Because once investors saw that Casgevy was becoming a commercial reality, it unlocked a much broader, more exciting vision for the company. See that massive forecast for Casgevy? That's actually just one part of the story. The real reason to be excited about CRISPR, the long-term bet, is the entire pipeline of other potential treatments they've got cooking.
And 2026 is looking like it's going to be a blockbuster year for them. They're planning to kick off a trial for hypertension, they're moving forward with programs for lung and liver diseases, and we're expecting updates on treatments for heart conditions. Every single one of these is another shot on goal, another potential home run for their technology.
So let's zoom out. What's the big lesson here? Honestly, this whole story is a perfect case study in how you have to think about investing in these high-tech biotech companies.
Here's why all this matters. For a company like CRISPR, getting hung up on short-term earnings is like driving a car by only looking in the rearview mirror. It's pointless. The real story isn't what they did last quarter.
It's what's coming next. It's about that powerful signal from a partner like Vertex. It's about the promise of their entire pipeline of drugs. And it's about the sheer size of the opportunity. I mean, Casgevy alone could potentially treat 60,000 people in the US.
So really, the main takeaway is this. The market's reaction wasn't crazy at all. Smart investors just tuned out the noise from one bad quarter and locked onto the signal. A huge, flashing sign pointing to massive growth right around the corner. They weren't buying what the company did last quarter, they were buying what it's going to do next year.
And that leaves us with one last question to chew on. When is bad news actually good news? It's a reminder that sometimes, if you look past the headlines and see the bigger picture, what looks like a setback is really just the prelude to a huge breakthrough.